Hello and welcome. Today we're going to work on the Bitcoin 10-year risk and return. Hey, if you're new, my name's Jeff from Learn. Here's what I've built, and so you can see where we're going with this. For Bitcoin, I've got a 10-year return, the annual rate, the standard deviation, and so on. So let's build it from scratch. So what I've done, today is the December 23rd, so I'm picking a couple of days before. So December 20th is my end date, and my start date will be December 20th of 2014, so 10 years ago. Now, what's our security? The way it works, I can pull this in Excel using a stock history function. So it is BTC USD. So this really functions like a currency. So from the home ribbon, we can go over to the data ribbon. So I'm going to select BTC USD, and that's a currency. It's going to pull, it knows that it is a currency. So let's look at the recent price. So as I'm filming this right now, that is the current price, and it'll update maybe as we're working on this video. I don't know if it updates about every 5 minutes or so, but anytime we do something, it will do a pull, and maybe every 5 minutes or so. You can always check using Excel rather than having to do a internet search or whatever. So we're going to start with the 2014 date, end exactly 10 years later on 2024. All right, so right here, I'm going to use the stock history function. I'm going to hit the insert function because I think that's easy. I can search for stock history. And so once I find it, stock history is going to be the stock, the start date, and the end date. Okay, I'm going to always point to that. And then I'm going to go ahead and edit the formula here at the top. So it's going to say, do we want to pull the daily numbers or the weekly numbers or the monthly? I'm going to do daily, just so I can show you how this works. And then I want to show all the instrument identifier and header. And then I want to show the date, which is 0. And I want to show the close, which is 1. I don't want the open, the high, the low, or the volume. You can get all that if you want to, but that's going to be the closing price. Now, since Bitcoin doesn't have dividends or anything like that, a stock split, nothing like that, then what happens is we can just use the closing price, and that's what's going to happen. So here's what it did. Excel can go out and pull the Bitcoin price rather, each day for each of the dates. So let's go all the way to the bottom. What I have is December 20th. And so the price, the closing price on the 20th was $96,562. Now, one of the things that happens is Bitcoin trades at 24 hours a day. So what happens is on the data providers, they have to pick some time. I'm not sure what time they pick it. If it's it's Eastern time in the United States, or if it's on GMT or something like that for the time zone or whatever. But anyway, you're going to have consistent data. It's going to be fluctuates during the day. Now let's look, 92,877. We'll see that it'll fluctuate in the course of this video. Now, so I've got the date and I've got the closing price. Now I want to calculate the return, the daily return. And the return is just going to be, after the first day, I can take the ending day, the second day, divided by the first day, and then I'm going to subtract out the 1. And so that means our return, I'm going to make it a percentage just to make where we can see it easier. So it is about negative 3% return for the day. If it went from 330 down to 320, you lost 3% in that day. So I'm going to double click, send it all the way down, and so now we have the daily returns. We have the daily returns for all the 10 years of Bitcoin. Now, if we look, what we can see is we're going to see there is about 3,550 days out of 10 years. So it looks like Bitcoin, we have data for not 365 days, but maybe for 355 days. We might be missing 10 days a year trading. Now in the stock market, there's about 250 to 252, maybe 260 trading days, something like that, to account for weekends and holidays. Not true with Bitcoin. So now what I want to do is just grab this real quickly, and I'm going to build this from scratch, but I'm going to use this to benefit us a little bit. All right, so here's what we have. I don't need any of these numbers right now, so let's start from the very beginning. All right, so what I want to do is I'm going to do a couple of name ranges real quickly. So I'm going to do this as the dates. I'm going to call this dates. I'm going to do the closing price. So this is the BTC. I'm going to just call it BTC for Bitcoin. And I'm going to name the returns here. I'm going to call it BTC returns. All right, so I have some name ranges. So, okay, now I want to do the daily standard deviation of the return. So this is, we're going to start with standard deviation of the population, and we're going to take the BTC returns. We want the return, so how volatile is the returns? And so on a daily return, the standard deviation of the returns is 4.05%. Now, the daily variation is going to be, the daily variance is going to be the 4% squared. So we take it to the second power. All right, so now we have the daily variance. And how many trading days are we talking about? Well, we can count. You can easily do this and count. So total days, we're going to do count, and then the dates. Now that gives us 3551, but we're basing it on the -1. We'll subtract out -1. So we have really, how many days do we have returns? We got 3550. So our total trading days each year is about 355. And so if we divide this out, we got 3550 divided by the 355. We're talking about 10 full years. So how do we calculate the annual variance? Well, the annual variance is going to be the daily variance times 355, and we're going to get the annual variance is 58%. Now, we need this number to calculate the annual standard deviation. So we can just take the square root of the 58, and we end up with the annual standard deviation of about 76%. Now this is high compared to maybe the S&P 500. The S&P 500 standard deviation might be like 18 or 20% for the year. So you can see this has much more volatility. Now what is our annualized return? Now, one thing we want to calculate is the compounded annual growth rate, or CAGR. And the CAGR is going to be, so this is the return on some dollar amount. Okay, so I want to use $1,000 just to make life a little bit easier for us. So what if we said we're going to start with $1,000? All right, so this is $1,000, and then it grows daily by the interest rate. Well, here this is a negative return, so we're going to take the 1,000 times, start with parentheses, 1 plus the minus 3%. And so what happens is if you invested $1,000 when it was $330 and it went down to $320, you lost, about $30. Okay, so we can go all the way down and we can see, well, what is your amount worth at the end? Well, it's worth $292,000. Well, from that we can figure out what is our annualized return for those 10 years. So let's do the RRI function. The RRI function is going to be the return on investment. So the number of periods, we're going to do 10 because it's an annual amount. The present value is going to be 1,000. We put 1,000 in, we assume 10 years ago, and it grew to the 292. So what is our annualized return? Well, our annualized return looks like about 76% for the year. So that's pretty impressive. So $1,000 invested, and then 10 years later you have $292,000. Now we see that the Bitcoin price has changed just when we've done the video. So this is helpful to see what the current price is. And the last price we had on this one was 96,562. So 96,562, it's down $4,000 just from 2 days ago or 3 days ago. All right, now the other way we can do this is we can do the annual returns. And so here I've just built these annual returns to be helpful for you. So what happens is the price started out at $330, and each year we have an annual return. The way we're going to do this, I just pulled the price from each of these dates. And so what happens, here's how we do it to calculate it. We're going to take the ending price divided by the beginning price. Okay, so that's 134%. We have to subtract out the 1, so you had a 34% return, and then all the way down. So each year is pretty large, either a large return or a huge return or a large loss. Losing 75% in 1 year, losing 64% in 1 year. That is the risk and return of Bitcoin. So here's how we do it. So the summary information is, yes, it's risky, but there is a high return over the last 10 years. All right, thanks for watching. We'll see you on the next video.